Hi, Kelly Eckholt here to update you with the key events of the week. So this week the key information really came from events offshore, as we had interest rate decisions coming from Canada and the United States, and we also got some quite interesting Australian CPI data. Starting off with that CPI data in Australia, that showed that inflation came in a little bit lower than expectations. Trim mean inflation there registered a 3.2% annual rise, which is a bit lower than what implied RBA expectations were. And that's led markets to conclude that a 25 basis point cut is going to occur in the Australian cash rate next month. And also, my colleagues in Australia have moved their rate call for the RBA from a cut in May to a cut in February. In terms of those foreign rate changes, we saw the Bank of Canada cut their cash rate by 25 basis points to 3% as expected. But interestingly, they expressed a very neutral view about what was going to happen with interest rates there next. And in keeping with that theme, the Federal Reserve left rates unchanged in the United States and also sounded a lot more agnostic about when and if interest rates will be cut further in the United States. In general, I think we're in a period now where central banks are moving into a bit of a wait-and-see approach to interest rate policy. Domestically, the ANZ Business Outlook survey came out, and I guess the most interesting thing there was that it showed that pricing and cost pressures are still fairly intense for businesses. Nevertheless, though, markets still seem very confident that the Reserve Bank of New Zealand is going to cut the OCR by 50 basis points at its meeting in February. Next week, we're going to be getting the Q4 labour market surveys out. We're expecting that those are going to show a further increase in the unemployment rate to 5% and a decline in inflation pressures. I'll be back to update you again next week.